Explainer. Today, we're building a blueprint for anyone who's ever had a business idea. We're going to break down the three fundamental pillars you absolutely have to understand before you start: your environment, your sector, and your structure.
So, let's just start with a number: $600 billion. What does that sound like to you? The GDP of a small country? The value of a tech giant?
That was the value of Lehman Brothers, a financial institution that had been around for over a century and a half. I mean, this company had 25,000 employees. And then in 2008, poof, it just vanished. And why? Because it failed to understand one absolutely crucial thing: its environment.
Look, a great idea is not enough to survive out there, let alone succeed. So today, we're going to walk you through the entrepreneur's journey. Think of it as a strategic map for navigating the business world. We'll survey the landscape, find your place on the map, build your foundation, and then put it all together. All right, let's get into it.
The very first step on your journey, before you even think about laying a single brick, is to survey the landscape. You have to understand the world your business is going to live in, all the currents that could either push it forward or pull it right under.
So, what is the business environment? Well, it's pretty much everything outside your direct control that can affect your company. Think about a sudden change in government policy that jacks up your costs, or some brand new technology that makes your killer product obsolete overnight. And the key words here are dynamic and unpredictable. It is always changing and it is full of surprises.
So, why should you obsess over this stuff? Because understanding the environment is the difference between being proactive and getting completely blindsided. Remember Blockbuster? They just saw Netflix as some quirky little service, not the world changing threat it was. Analyzing the environment is how you spot that new market opening up. That's your opportunity. It's how you see a new competitor coming over the horizon. This whole process gives you direction, and it forces you to be honest about your own strengths and weaknesses.
And one of the most important vital signs for the economy is GDP, or gross domestic product. You can think of it as a quick snapshot of an economy's health. If GDP is on the rise, the economy's growing, and that usually means customers have more money in their pockets to spend. But if it's falling, belts are tightening, and you'd better be ready to adjust your strategy.
All right, let's move on to our next step. Now that you've got a feel for the landscape, you need to find your own place on the economic map. Every single business, from a tiny local farm to a giant tech company, fits somewhere. And this is where sectors come in.
So we can classify almost any business into one of four main sectors. Let's take something simple, like a wooden chair. The primary sector is the team that goes out and cuts down the timber. The secondary sector is the factory that actually builds the chair. The tertiary sector is the retail store that sells you the chair. And the quaternary sector? Well, that could be the software company that designed the logistics to get it all there. See? It's a whole journey from raw material to pure information.
And this chart really just shows how dramatically economies evolve over time. As a country develops, its focus shifts. Back in 1841, only about a third of the UK workforce was in the services sector. Fast forward to 2011, and that number has skyrocketed to 80%. The whole economy moved away from just making things to providing services and knowledge. Understanding this trend is absolutely vital for seeing where the opportunities are going to be tomorrow.
And now, for what might be the most critical foundational decision any entrepreneur makes. You get the environment, you know your sector, but what legal form is your business actually going to take? This choice is huge. It's going to affect your taxes, your personal liability, and how you make decisions for the entire life of your business.
Now, what's really fascinating here is that the vast majority of private businesses in the UK, we're talking a staggering 59%, are sole traders. That's 3.5 million people who've chosen the simplest structure there is. And these are your plumbers, your hairdressers, your photographers. They're really the backbone of the entire economy. Okay, before we even start comparing the different structures, you have to understand this one concept: unlimited liability. It is the single biggest risk for a lot of small business owners. What it means is there is no legal separation between you and your business. So if the business racks up debt, creditors can come after your personal savings, your car, even your house. Everything's on the line.
So the simplest options right out of the gate are the sole trader and the partnership. As a sole trader, it is all on you. You've got total control, you keep all the profits, but you also carry every bit of the risk and responsibility. Now, in a partnership, you get to share the workload, you share the profits, and you share the expertise. The real trade off here is between having total control and sharing the burden. But you'll notice both of them carry that same massive personal risk of unlimited liability.
But what if you could build a firewall between your personal risk and your business? Well, that's the magic of limited liability. By forming a company, you create what the law calls a separate legal entity. The business itself can own things and owe money, completely separate from you, the owner. This is the huge leap forward you take when you form a private limited company, or an LTD. Unlike a partnership, an LTD builds a legal wall between the business and its owners, the shareholders. This protects your personal assets if things go south. Your risk is limited only to the amount of money you invested in the company's shares. That's it. And of course, beyond these common forms, there are other paths you can take. If you're dreaming big, a public limited company or a PLC lets you raise huge amounts of capital by selling shares on the stock market to literally anyone. If you'd rather use a proven model, a franchise lets you operate a brand like McDonald's, which really cuts down on the startup risk. And if your main goal isn't profit, but purpose, there's the third sector. That's for nonprofits and charities, where the mission is all about social good. So after this whole journey through environments and sectors and structures, what have we actually built here? Well, we've created a strategic blueprint, a repeatable way of thinking about any business, whether it's your own big idea or one you're just analyzing. So always remember this three-step blueprint. First, survey the world outside your window before you act. Second, locate your precise position within your industry. And finally, build a legal foundation that's strong enough to support your ambition. This isn't just theory, you know. This is your actual path from a simple idea to a viable, real-world business. And that leaves us with one last thing to think about. At the end of the day, what truly determines success? Is it the initial spark, the brilliance of the idea itself, or is it the wisdom to understand the world that idea is being born into and the foresight to build the right ship to carry it on its journey?